Hey listeners, it's Paul Andreola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
All right, well, look, everyone, thanks for coming back out. This will get together. I guess we're short on finding companies that are local that want to come out.
I get desperate. I get desperate.
Paul, why don't you just take it away?
Okay, thanks. You guys all know me, Paul Andreola, CEO of Namesilo. Little bit of history here. Okay, I'll describe a little bit of what we do first. We have one of the largest, I'd say one of the top 10 largest domain registrars in the world now. You guys know GoDaddy or Two Cows, you know that we're kind of in that, not quite as big as GoDaddy, but we are in the top 10 of, I'd say roughly 3,000 domain registrars that are out there. So, you know, in a pretty nice class of companies. So what we've done is we've taken that domain registrar business and taken the, basically now the cash flow, and we're redeploying that cash into other opportunities, and I can get into that in a couple seconds. So yeah, next slide. Okay, break up the company right now. We own 81.5% of the domain registrar. The other 18.5% is owned by the management team that are doing the day-to-day running of the business. And then various other entities we have, we'll see it in the next slide, but in the investment portfolio, we have various percentage ownerships in different businesses. And then there's a new business that we're trying to acquire, and I can touch to that as well. Okay, jump to the next slide. Okay, so these numbers are going to be a little bit stale dated here as we get our next set of numbers out tomorrow. It might be Friday. But we purchased the company for roughly $12 million Canadian, just over 12 million. Actually, sorry, total purchase price with all the earnouts and everything turned out to be $12 million US. Since then, we've managed to see distributions of over $15 million. So the company's been cash flowing very nicely. And just as of, let's see, 2024, operating cash flow alone was 6.6 million for the LLC.
That's USD.
That's USD, yeah. And maybe, yeah, flip to the next one. Okay, so why Namesilo? Why are we doing well as a domain registrar? There's really three classes of domain registration or registrars in the world. You have GoDaddy, which is really in a category by itself. They spend over $500 million a year in marketing. We've all seen their ads, so we know what that looks like. And then you get what we call the second tier companies, which are the Two Cows of the world and others that have sort of legacy domain registrar businesses. They can't compete with with GoDaddy as far as marketing. And they can't compete with a class of company where we sort of work. And we work sort of in the lower price portion of the market. We're sort of the Walmart of domains. We sell them significantly cheaper, and we're able to sort of take advantage of kind of what's happening within the industry. So typically, GoDaddy will draw in new customers that don't really know better. And when they've been paying $23.98, for example, for a number of years on top of the other services that they provide, and realize that they get the exact same product, exactly the same for cheaper, we start to see, migration from companies like GoDaddy and Two Cows and others. So we've been one of the fastest growing domain registrars because of this. We're growing at about 3 times the pace of the industry in general. So clearly we're getting market share. Next slide. Okay, so as of now, we have roughly 5.8 million domains under management. Since we acquired the company in 2017, we've grown that number by about 214%. And as of the last sort of trailing 12 months, we did 58 million, just over $58 million in revenue. And that number continues to grow. We do operate in over 160 countries. We have 150 different payment methods, including Bitcoin, cash, Apple Pay, you name it. A lot of different ways customers can purchase from us. And like I said, there's only 10 companies in the world that have over 5 million domains and we're one of them.
Can I ask you a question?
Okay, so apart from just domains themselves, originally when we bought the business, all they sold was domains. Since we took over the business, we've been adding a whole bunch of ancillary services, including hosting, security, email, logo making. We actually just announced an acquisition yesterday of a company called Short URL. So now we offer short URLs, which is as the name implies. So various other products that we can now upsell to that domain buyer. Next slide. One of my favorite slides. We acquired the business right here, and obviously have been able to grow it in that time frame. And we don't see that number or that sort of pace of growth slowing down right now at all. 5-year CAGR of 11.9%, but if anything, we've seen acceleration in the rate of growth over the last couple of years. Okay, next slide. Our yearly performance, unfortunately, can't quite get that last bar there, but same trends in the yearly performance in the domains under management. We've seen a significant rate of growth over the last, like I said, over the last year, probably over 20%. So very few companies of our size have been able to grow at that pace. And of course, it correlates into our revenues. We've not had a down year in terms of revenue since we acquired the company. And this year, by all indications, will be another record year as far as top line. So we're happy about that. And should easily surpass the $60 million in trailing 12 months here on our next financial statement. So the other thing to keep in mind here is that next thing about domains is we get paid up front, but we have to accrue that revenue over the course of a year. So bookings is probably a better representation of how well the business is doing. And in this case, our bookings are growing at the same pace, if not faster than our revenues right now. Slide. I wish we could have that last bar there because that's the prettiest one. Key thing to really watch in our business is free cash flow. Lots of non-cash items that we deal with in our income statement. And as you can see, our cash flow is significantly higher as we've been able to grow the business. It's lumpy from time to time as we redeploy some of that capital, but highly cash flowing business right now. Let's see. Okay, so next part of the business, and probably now what gets me the most excited is what we do with that cash flow. There's very little opportunities to reinvest the cash into the domain business, apart from the acquisition we did yesterday. So what we've been doing is we've been starting to allocate capital and other opportunities that sort of present themselves to us. We are trying to work within what we think is a sweet spot. Sort of the market is dominated, the private side of the market's dominated by private equity, but usually you're looking at $20 million purchases and higher. We're trying to keep ourselves below that market, so we've got less competition. And because of the experience and sort of the years that the directors and the capital team have been around the markets, we also have access to investments in public vehicles, and we'll talk to a few of them as we go here. But really now the effort is to redeploy that cash in, let's call them mispriced assets or assets we think can see a significant rate of return on capital. Okay, so some of the investments we've made so far that are of note. Atlas is a company that we invested in early on, pre-IPO actually. Our cost base there was about 10 or 15 cents a share. Stock now trades around 80 cents. It's been higher. That's kind of what we look for, the opportunity to be able to participate in that sort of private public arbitrage opportunity. The one I'm really excited about next is Alchemy. Shield Care that's now gone public. So we sort of monetize that in the sense that it's tradable and we could sell shares if we wanted to right now. Allure is a private company. It's been kept private probably longer than we expected, but we've got that on the books at our $75,000 original investment. We've been told that it's now worth about 10 times that price. So it doesn't really reflect properly in the books. O is another private company that we've been helping to fund, which has been growing extremely rapidly. That's anticipated to go public in Q1 of 2026. And then, like I said, Alchemy is the one that gets me the most excited. We just recently helped them close what was originally going to be a $1.5 million bridge round. Ended up closing $6 million on that, and is expected to go public in Q4 this year. So next slide. Team, myself, I think you guys know me, but I sit on several boards. I used to be an investment advisor, worked as an investment banker for a little while, but really, my love and passion is investing. So we, along with Trevor, we run Small Cap Discoveries and are busy looking at lots and lots and lots of deals to see what we can do with them. So Christoph's, he's the operator of the business, of the LLC. Christoph's did have a quite successful exit of a tech company back in 2016. And the reason we have Namesilo LLC is he basically went back to his agent who sold his original business and said, hey, I'm looking to sort of put the band back together and we want to do another deal. And that agent went out and found Namesilo LLC, and he's now been operating that business and quite successfully so. And now at this point, we're looking at taking that team and seeing what else we can do with it. And I can talk to about sort of the next step there. Colin has been my partner on the venture capital side now for about 15 years. Long history of experience. Connected, you name it. Paul Kozak, XIA, has helped with some of the investor relations and the components we do there. And of course, Dash is our CFO, who's been with us for 10 plus years. By the way, we just added someone named Dan Milich, just announced it a couple days ago. Dan is ex-BMO, used to work in the credit department there. We've worked with him on Small Cap Discoveries, phenomenal modeling expertise, and has been a very big help in helping the due diligence on a lot of the projects we work on. Shares outstanding, roughly 87.9, call it 88 million shares outstanding. Options, that's obviously the share price is a little outdated now. We have a little bit of money that we owe somebody in this room, which we will take care of soon. And I mean, this is a little updated, but give or take these numbers, that's where we stand. Portfolio investment now significantly higher than that, but you can see the breakdown of shares. Management owns about 16.5%. We've got a fund that owns a sizable amount, and then about 60% is owned by retail market right now. So I guess in summary, really, it's all about what we do with the cash flow now. Our core business will continue to grow in sort of high single digits, low double digits. That cash flow has to be put somewhere. So we've been active on a normal course issuer bid in the past, not so much in the recent months here. We will continue to expand the investment portfolio, continue to look for these private to public arbitrage opportunities, and where we can, if we find anything that sort of supplements and helps the operating business, we'll keep doing acquisitions like we did with short URL. And that's it.